Pulver, and he's with MTI, Market Traders Institute. And I met Chris about 4 years ago. I threw an event in Las Vegas in the fall at the Traders Expo for all the traders. And so I was blessed enough to have him attend that session I guess it's been about 4 years now. Chris, why don't you mic up for me? Today he's going to be talking about the ultimate trading room experience. And, you know, he's all about becoming a profitable full-time trader, like moving from your day job to being a trader. And I want to talk with him for just a second about his story. Is so important to me. I feel like a lot of times when we're out there in our lives, running our businesses, running our jobs, we don't, we try to say, how can I move from this to becoming a full-time trader? When and how am I going to make that move? And so Chris is one of those guys where he actually did that. And Chris, I just want you to, you know, I did hear a little rumor about your former PGA life. So I think it's important that you tell people, how did you become a trader? Like, what was that day? What was that moment?
Sure. And again, thanks for having me. Really excited to be here and excited for today's session. So yeah, I mean, I've told this story a few times, being in several webinars, but basically it's this. I've been in the golf business since I was, 12 years old, played golf since I was 5 years old. I loved the game. I got into the business, went to school for it, graduate degree, got my master's, did my PGA membership stuff, happened to be working in South Florida at the time, and I was running an instruction franchise. So I've been an instructor. I've been a teacher for a long time. And one of my clients was this guy that came in every day in shorts, t-shirt, sunglasses, rode in on a scooter. This is in downtown Coral Gables in Miami. And every day around like 11:30, he'd show up to our studio and he'd hit balls. And he's just like, yeah, cool, I'm gonna go play golf. He was a member at Doral, played there probably 5 days a week. And I'm thinking, what on earth is this guy doing for him to show up every single day? Just shoot the breeze, talk shop, talk about golf, go play golf 5 days a week. And he's doing it by like, noon every day. So all we had in our little customer profile was he was in finance. So eventually we ended up talking. Turns out he was a full-time fund manager. He traded Forex. That was it. I had no idea what it was. I was brand new to the industry. I've traded stocks since I was, 18, just kind of dabbling like, oh, cool, I got an iPod. I want to buy Apple. I like these DVDs coming to my house. I like Netflix. I'll buy Netflix.
Like that was Walmart. Go long.
Yeah. So, I mean, it was really, the path was, okay, look, I'll give you free golf lessons. You teach me how to trade. And it was a bit of a, quid pro quo, like, we spent a lot of time together. We ended up working together for several years. I owe my start, my kind of origin to him. Without that exposure, I would have never really had my eyes open to the Forex industry and certainly become the trader that I've become today. So that's where it started. He had a really unique strategy. I mean, he was literally a grinder. Like, he would get in, he was trading one currency pair 3 hours a day. Probably 50 to 100 standard lots every single day. I saw him, make 50 grand a day. I've seen him lose 20, 30, 40 grand a day. But he essentially looked at it like, okay, I've got pals I play golf with that are lawyers and doctors, and here's what they make. This is what I do for 3 hours a day, 4 days a week. I take Fridays off and play golf. He's like, I think I'm a pretty good company. And I just thought, I want to do that. So I didn't quit my day job day one. I worked at it. I stayed in the golf business. My goal was to work as hard as I could, take whatever job I could, and grow as fast as I could to set aside a nest egg and start trading. So I started off my first live account with $2,500, and it took me about 4.5 years. And I did keep putting money into it, so I'm not just like $2,500 to six figures, but I was putting more money in. My biggest deposit was around $20,000 as I was growing it. But from 25K to 100K, that was pure growth. And from that point, that was back in like 2010, 2011, from six figures onward, it's just been me preserving that capital and compounding those gains. So
love it. Love it.
Outstanding.
Love it.
So it's been a long journey, but a great journey, to the point where now, I work for Market Traders Institute. I've been with them, on and off for the last probably 8 years. And the good thing is there are thousands of traders I get to talk to, thousands of traders I get to teach. And I'm really spoiled here on my end, because I take my passion for teaching, my authenticity for being a trader and being a student, just like everybody that's in this webinar or watching this webinar. I mean, I was a noob. I was learning for the first time. So it is definitely an acquired skill. It is definitely a learned skill. It does take time. It does take a ton of patience. It takes a lot of, repetition. But everybody can do it. I mean, that I genuinely mean that. Like, everybody can do it. But it's not easy. I'm never going to say trading is easy, but man, it sure beats. I mean, I haven't had to leave my house in, 8-9 years. So everything with
Well,
coronavirus
we
right
should
now.
talk about that later.
Nothing's changing. What's going on out there in the world,
That scares
So
people.
there's this little thing called a pandemic going on.
Yeah,
Have you heard about it?
everybody keeps talking about it. I keep seeing people with masks. Like, what's going on?
Sheltered in place for 8 years. Chris, delighted to have you here. Looking forward to your presentation, my man.
Yeah, thanks a lot.
Chris, take it away.
All right, perfect. Thank you. So I'm here to talk about today, an ultimate trading room experience. And, this is what I mean. So I have been fortunate to teach a lot of traders around the world for many, many years. And I take my passion for teaching, I take my passion for the markets, and I'm putting it into a trading room. So I happen to run one right now for Market Traders Institute called the Flex Trading Room. It's now 2 years running with one of the largest followings we have with all of our active clients. Before, I pulled something from Stephen Colbert. I called the Pulver report, and same thing, trading room. We made a lot of pips together. So we've had some great track records, some great trades. This year, we're up about 27,000 pips just in the Forex market. And that's from January 1, all tracked, all traded. And last year we finished here at 30,000 pips. The reason why we've made a nice little leap to, look, we're going into September here. I think from September, October, November, December, I am excited. I thought, Jeff left off these great questions with, the election coming up and what I'm looking forward to. I think the one thing as far as my analysis going forward for this year is I might have a big question mark around my direction, but I think that the market's going to absolutely deliver a lot of volatility. So one thing that we need as traders is movement. And we have seen a lot of lackluster movement. We've seen a lot of suppressed volatility outside of that little window that we had in March, right? Everybody can remember, if you were trading through this at all, late February, early March to, mid to late March, just this wild roller coaster thing. Circuit breakers are going off. Volatilities. I mean, we're watching the Forex market move from 100 pips a day to, we had Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. They went from like 100 to 200 pip daily trading ranges to like 700, 800, 900. We had I think we had a 700 pip day on some of those currency pairs in one single day. So that was like volatility off the chains. And I think that going into the election, we may not see that same, peak of volatility, but I certainly think we're going to have a heightened level. And that to me is encouraging. That is exciting. And I know that I have the right tools and systems and strategies to help traders capitalize on this, because I certainly don't want to be ill prepared. I've said this for many months now as we've moved away from April and May. I asked traders, if you were able to experience March all over again and now be better prepared and have the right systems and strategies and the right agility, how do you think you would trade? And it's a lot easier to look back and see like what happened in March. If we experience that in any capacity, that we will be way better prepared for capitalizing on it and not just, trying to manage some of what we're in. Like, for example, I trade higher time frames, I trade big levels, and I was filled on a lot of positions. And we had some massive structure breakdowns as far as, 20-year lows, 25-year lows, major support resistance levels that just the market did not respond to at all. We had several flash crashes in that 2 or 3 week period. And in the Forex world, that can become very violent for retail traders. Now, I'm also a conservative trader, but the best part, and my whole point for today's session, is a trading room gives me the platform to talk to everybody. So it's not allowing, I'm not allowing you out there to trade alone. I'm allowing you to trade with, literally we have 250 to 300 traders live every single day. I have like 2,000 active followers in my trading room that are watching the recording, staying up to date with the signals, staying up to date with my Telegram channel. So anything that I can trade, anything we can talk about, we're gonna find trades. And it's a lot more enjoyable to do it together. Traders are coming in with all sorts of tools and resources, and we're all just sharing everything. So we have a lot of fun. We get to talk shop every single day. I could be doing this session right now. I already did a 2-hour live webinar this morning. I've got more webinars today. I literally talk about the markets, 6 to 8 hours plus a day. So I can do this all day long. And good thing that when Friday rolls around, I'm ready to take a break and take a breath, but I'm right back at it on Sunday night and Monday morning. So I think what's out there for traders is, finding a trading room experience, finding a community to trade with is going to be a lot more enjoyable. I think that traders that are new to trading or traders that are wanting to learn, I will say this, my pace is probably about like it is right now. I tend to talk a little bit fast. I don't mean to, it's just kind of the high energy that I bring. But I will say that my mission as an instructor, my mission as a host of a trading room, is to make sure that traders are learning while they're earning. I want to make sure that traders are, understanding why I'm making the decisions that I'm making, and they can see me talk through trades and talk through price action and put out hypotheticals. Because look, we might understand that this is where a top should be forming, a bottom should be forming, this is what type of confirmation we're waiting for, but I would much rather explain that same little area, break it down to the most granular details, and show that, okay, look, we can break this trend line and it might just go. Like, we break the trend line and start to fall just like we want it to, and that'd be perfect. Or we can break the trend line, we can come back and retest, and we can fall. We can break the trend line, come back and retest the high, or go a little bit higher. It's just repetition, right? It's what price does over and over. So the more thorough we can explain things, the less surprised we're going to be in the markets. And so my job, just like I'm talking about that volatility in March, my job is to take that, learn from it, and then prepare and apply. If we experience that again, I want to learn from that so we're not caught on our heels and caught off guard. And so it's that type of attention to detail where in a trading room we can do it live together. We can talk through everything together, and we can also, just be very black and white. Like, let's trade what we see. Right? Yes, I've been waiting for a top to form on the Aussie dollar for the last couple of months. I've seen some of the most extreme conditions this year that I have ever seen in my entire career for the last 10 years full-time trading. I have not seen the type of bar counts, the overstretched conditions. Obviously, the roller coaster ride of what we had with corrections in the stock market to what we see in the recovery, whether you call it real or a disconnect from reality or artificial mechanisms or financial engineering, whatever's going on right now with the Fed and coronavirus and stimulus package. And it's a global effort to make sure that, chaos doesn't happen again. But we know that that's not the case. All it's doing is creating more extremes and more of these. I just think we're leading ourselves into another bubble. I'm not going to call the top. Not interested. I will stay long as the market stays long. If it's bullish, I'll be bullish. But when we see those confirmations, that evidence that things are changing, I will be taking note and I'll be looking to trade accordingly. So before I get into the charts here, just understand, I'm sure everybody's saying this through their sessions, but of course, trading involves risk. Make sure the most important thing in your trading that you can do for yourself is take care of that capital. It is risk capital. So don't trade the money you cannot afford to lose. All right. This is kind of my three-pronged approach, my 3P with CP approach. Patience. This year has been an incredible year to test our patience. We have had to kind of react to the markets at times. We've had to stay very calm at times. We've always had to stay prepared. That's one thing that I'm a big advocate for, is like, you can always be better prepared. You can always learn from past experiences. The market does do the same things over and over. I firmly believe that right now what is happening with all these wild disconnect is not different. Just because we have, gold higher and stocks higher and dollar weaker, at some point these correlations are going to find their way back into a normal environment. So if we have these, crazy stretch standard deviations, they're going to come back in balance at some point. Now, I don't know when, I don't know what's going to be the catalyst. It doesn't really matter. But as a trader, we're always looking for the right signs to take the next trade. So patience is a big deal. And I have traders that come into my trading room, and even today, if anyone wants to come into my trading room or get my signal service, that's great. But I will ask you this: if you're signing up for something like a signal service, do not expect my first trade, second trade, third trade. Look, you got to give me like 20 trades. You got to give me 50 trades. I've had traders in the last 2 weeks that my signal service has gone live. I've had traders email me and say like, Chris, what about that one trade? I'm sitting in 6 positions with my signal service that are all profitable right now. That are all running, and we're going to let those profits run. But it takes time to let a good trade set up. So, am I going to promise 1,000 trades for the year? If there's 1,000 great trades, I'm going to take 1,000 great trades, but I will only really take the trades that I believe I have a chance to win. And am I going to win every trade? No, because if you're asking me to keep the stop losses nice and tight, keep the risk management nice and tight, I have to have a clean plan. So clean entries, clean risk areas, bigger reward than risk. Mathematically, that's the best way to be profitable. Okay. So always waiting for great setups, never settling for a mediocre trade. I see traders do that all the time. Traders just want to get in. Traders just want to do something. Look, we spend like 6 to 8 hours a week together in my trading room. There are certain times where we will never take a trade, but we are always talking about the next trade. We're always talking about, if this happens, then this happens. Here's what we're going to deploy. Here's the system we're going to use. Here's the setup we're going to take, right? But I can't promise that in the 2 hours we spend in a live session, we're going to place a trade that time. But stay up for the recording. Follow my Telegram channel. Signal services sent directly to your phone. You know exactly what we're doing. Okay. Preparedness. We say this here at Market Traders in our webinars. The market is always right, whether you want to argue that or not. I mean, we forecast things, we predict things, but you know that at the end of the day, the market's always right. Example. I think of the Forex market particularly, but we have seen some massive moves. Example being, like, imagine the stock market highs, and I've seen newsletters for this back in 2014, 15. I've seen death of the dollar, death of the stock market. It's all going to, chicken little, sky is falling stuff back in, 2015 and 16. Here we are, 4 or 5 years later at crazy new historical highs. Has the dollar, dropped? Yeah, this year, but the dollar's been strong. 2014, 2018. Not doing what we're reading about, not doing what everybody's forecasting. So look, you can make this big, bold prediction. You can forecast all you want, but if you don't manage that trade or you don't acknowledge what the market's actually doing, it's just a forecast. And so I'm in the trenches with every trader that I'm with. So we will trade to be profitable. Okay. And I know that one of the biggest steps I took to being a more mature and seasoned, trader is I was willing to take losses. I was willing to take, when a trade is invalidated, I'm willing to close it up and call it good and be done with it and go find the next trade. Because I've been on the other side of that where, there was about a 3-year period in my track record where I never had a losing trade. Now, what I mean by that is I would take groups. So I would have, I'd build a small position, build a small position, build a small position. I'd manage it to profit. And I would consider that like that's a win. That's a group win. I did that for 3 years straight. Now, I had some close calls. I had some close calls on the Swiss yen. In fact, I think, Jeanette, that year that we were in Vegas, good thing we had our time to meet in our party time, because in the back of my mind, I was thinking, man, that Swiss yen trade is driving me crazy, because I was in like a 20% drawdown. Now, fortunately, it came back into profit. I closed out without a 1% win. And literally a week later, I would have been up about 15% in profit. The emotions that play with you for being on the wrong side of the trade, for just not acknowledging what the trade is, it was against me. There was a much easier way to get out of that trade and a much better way to follow along. So rather than going back in hindsight and trying to make excuses and rationalize why you're holding a bad trade, why not call it what it is? If it's a bad trade, if it's invalidated, you didn't do anything wrong, right? If you followed your rules, if you had a clear equity management plan, you didn't do anything wrong. So I think traders kind of need that little pat on the butt, like that reassurance of you're not doing anything wrong. You're not making bad decisions, right? The bad decision is adjusting that stop loss or moving the stop loss or not using a stop loss or having no exit plan. Because at some point, most of the time, retail traders get absolutely crushed in 1 or 2 scenarios where these irrational moves happen and the market goes further and faster than you want, further and faster to the upside, further and faster to the downside, and you don't have enough capital or your trade sizes are too big that you can't sustain that type of move. So if that's, again, the way to correct that is trade smaller, trade more conservative. Take the stress out of trading by being really, really small with your trade sizes. That's totally fine. Otherwise, call it what it is. If it goes against you, it's invalidating your trade setup, then be willing to take a loss. You'll make it back. I promise you, trades will get easier. If you take a good trade and you ride that trade and you ride those winners, trading gets easier. When it gets harder is when you're managing, bad positions that you can look at. You could ask, your husband, your wife, your kids, your dog to come into your room and look at your chart. And if they can say, you should be selling that, right? And you're like, well, I've been buying it, holding the whole time. I mean, if anybody can look at your chart and tell you what direction it's going and you're not in that direction, then again, we need to prepare differently. Okay, profits. I like to keep the math really simple. If you're protecting profits that are bigger than your risk, you're doing the right thing. Traders ask me all the time, how do you protect all your profits? What do you do? When do you put a stop loss in? Where do I close out the trade? I will say this. Anything that you're doing to close a trade in profit that is at least a 1-to-1 or better is a thumbs up in my book. In the Forex market is way more liquid, way more obedient, way more efficient, and it's a trader's market. So the odds of getting a constant, 2-to-1 setup, 3-to-1 setup, 5-to-1 setup in the Forex market is pretty slim. There are certain opportunities where you might take a 1-to-1 and just trade with a high win percent because you're getting some great structure. You buy low, reward yourself, sell high, reward yourself, and you can trade those levels. Be a trader. There are other trades where we've already had a trend and we've been taking advantage of this. That could have been a small risk and ride those profits as long as possible. We find some lows, we buy low, and we ride that as long as we can. Those are the surpluses. But you'll never hurt my feelings if you are risking 1% and you're taking profit at 1.5% or 2%, because you can always get back in, right? And we should know that with trend systems, there are ways to always keep that risk very small. In fact, that's the goal of a trend trader. Risk as small as possible, let the winners run, okay? So, do I trade ranges? Yes, I trade lots of consolidation, lots of ranges, lots of patterns. I trade trends as well. I'm looking for breakouts constantly. But I say this a lot to my traders. I mean this. I don't know if I coined it, but I'll take credit for it because I say it all the time. Process equals profits. And part of that comes from golf as well. My background in teaching, I've coached some great players that went on to play Division I college golf, mini tour golf. And, look, some of them have never really made a lot of money playing golf, but they're phenomenal players. They still work at it. They still grind. They're still on the the lesson tier, the range, 4, 6, 8 hours a day trying to get better. Trading is the same way. So I've taken that, desire to get better. I've taken that competitiveness and I've applied that to my trading. And I've also taken my passion for teaching into this as well, which is why, I can do this all day long. Okay. So I think this is a really important thing. The markets will test you emotionally. You've got to stay patient. If you are stressed at all when you're trading, trade smaller. Right? I mean, I would say, sure, trade a demo account if you want to. But if you really want to make a go at this, you're going to have to pull the trigger on a live account at some point. So when you trade a live account, just trade small. I've had friends of mine that know that I've been a trader now for the last, 10 plus years. And, they're like, hey, Chris, I mean, how do I get started? And they're like, they've got money. They've got 20 grand, 50 grand, 100 grand. They're like, okay, I want to make some money. Can I follow you? Look, if you're doing it on your own, trade small. I've had friends of mine that started with a $25,000 live account and I told them to trade micro lots. So, they would win some, they'd lose some. They had, maybe like $100 fluctuation up or down, but I wanted to see, would they stick with it? Could they last more than a month or two? Was it frustrating? Or was the process, were they able to show that, they made 2,000 or 3,000 pips? If they can show that, that's a promise to say, look, the process is working. Now you can start taking a trade size that's relative to your account, like make it a 0.5% risk, 1/4% risk. But the process takes care of the profits. At this point for me, a losing trade, a winning trade emotionally feels about the same. Of course I want to win. I never take a trade thinking I'm going to lose, all right? But as far as me taking a loss versus taking a win, I expect to win. I get frustrated when I don't win, but again, I'm just back to trading the next day. So it's not going to make me quit. I'm competitive. I'm going to make sure that I'm doing what I can to be profitable. Okay. This is important stuff to talk about for today. The third act in 2020. All right. It's been a ridiculous year. In fact, most people that you talk to have probably not said a lot of great things about 2020. We've seen, we've had celebrity deaths. We've had Mother Nature throwing fits. We just had, a hurricane hit the Gulf and we have another one on the way, or maybe it's hitting land. I don't know, but we've got crazy, crazy stuff happening. Obviously, coronavirus has taken the globe by storm. It's got everybody's attention. Is it going away? Probably not. Is it a new normal? Probably. We have this financial engineering going on with the stock market where, you've got sustained unemployment. Numbers don't mean anything in the markets right now as far as, we've got non-farm payroll on Friday. I have not cared about non-farm numbers in the last probably 3 or 4 months. Why? Because it doesn't matter. We just lost 25 million jobs in the US in like 4 weeks. We're slowly getting them back as, things are reopening. But if we ever threaten another shutdown, we're right back where we started. So it could, coronavirus could still plague the markets, but we don't know when or how. Right? We also have, we thought 2016 was bad enough. 2020 is probably one of the most polarizing elections that I've ever been a part of. I'm not here to get political. I don't care. I care who wins, but all I care about for the most part as a trader and for me to make money and make a living is I want volatility. I absolutely think that we will get a ton of volatility. Just like Jeff was talking about earlier, watch S&P futures. I can vividly remember in 2016 watching 1-minute charts on my phone, watching dollar yen, Aussie yen, euro, just watching the yen pairs go bananas through at that time it was Clinton and Trump. But I think it was when Trump won Florida in 2016, the market just started going crazy. And it lasted for, 6 weeks. So I think that we will have the election be a nice excuse for the market to use as a catalyst, whether it's good or bad, remains to be seen. We have a coronavirus vaccine that's in the works, all hands on deck and just eliminate all the red tape and just get the first vaccine you possibly can. I don't know if that's safe or not. I don't know if that's legal. I don't care. Again, as a trader, I want volatility. I think we're going to get it. So that's what I'm focused on, right? The next catalyst, I don't know if it's good or bad. It doesn't matter. Okay. So Election's going to be a big deal. We're only 60 days away. It's like 62 days until November 3rd. So it's really right around the corner. Now that summer trading is officially done, September, October typically are higher volatility months in the stock market. That's going to be, expected volatility for not just stocks, but also for Forex. That's a good thing. Symbols that I'm watching. Okay. This is a watch list that I want to spend probably the next 20, 25 minutes on. I'm certainly watching the indices. Okay. I'm watching the SPY. I'm watching the Qs. I'm watching the Dow. And I want to see where they're going. We know that the S&P overtook the highs from February. We know that the NASDAQ can't be stopped. I mean, we've had a dip from I think the March lows were like a 35+% correction to the downside, and we've rallied 60+% to the upside. Insane. Okay. The Dow Jones has not recovered yet. It's sitting there. There's still a gap from February and March that did not take those highs out yet, which is weird. How do we have the S&P continuing to climb? How do we have NASDAQ continuing to climb, but the Dow Jones and the Russell's not, just like Jeff said? And one thing to note, I saw this week. This is crazy. U.S. tech is more valuable than the entire European stock market. Okay. And really right now, the S&P, it's more like the S&P 5 than it is the S&P 500, because you have so much concentration in big tech and those big five: Apple, Amazon, Facebook, Google, and who else? Microsoft. Those five right there, that's where most of the concentration is, most of the market cap is. And that's great. Those are all impressive companies. I own each one of them, but I'm not going to buy more at all-time highs. I want to see some dip or correction to get back in, just like a trader would. But at the same time, if anything happens with those five, it's going to bring everything down with it, and probably to an accelerated tone. The VIX, the fear gauge, the volatility index, definitely watching that. Just last week, as we ended in August, the VIX ended up forming a bit of a higher low. So if you look at the VIX, and we can go to the charts here, I like looking at the VIXY and the VXX. Those are ETFs that I can trade to follow the VIX. We had higher lows from where we had that February, March low in 2020. We had higher lows just form in August. So if we're starting to round out some bottoms on those volatility instruments, I'm looking to trade. That's a good thing for me as far as day trading or daily trading ranges in Forex. Looking for stock opportunities if there's a bargain out there. But everything's just kind of been adrift. It's like, don't fight it. I mean, the path of least resistance right now is bullish. So until the catalyst sticks out, or until there's major price action to support a reason to short, you're guessing right now, and I don't want to fight it. So I'm not willing to fight the Fed. I'm not willing to fight the flow, but I am willing to buy volatility. I think that volatility is going to be a pretty safe instrument to trade. The dollar index, we'll talk about that in a little bit. Also, these are some stocks that I'm watching. I think these are really important ones. Wayfair, Zoom, Disney, and Darden Restaurants. Now, part of that's also kind of snowballed into everything for this year. Wayfair, probably one of the craziest runs I've ever seen. It's a company that was on the verge of bankruptcy to start this year out, and it dropped down from like $100 to like $20, which was an amazing short, and it proceeded from $20 to over $300. Insane. Okay. Zoom. Well, as soon as coronavirus hit and everyone's going to work from home, we have online retailers, e-commerce, and telecommunications going bananas. I can't tell you where Zoom started, but I can tell you that the gains that it has seen, and in fact, yesterday it was like $450 from, I don't even know where, from nothing to $450. And it's all been a rally this year. Disney, now I think we'll get into some reality here. Disney is an important one to watch. Why? A lot of their revenues, like I believe 25% of Disney revenues come from theme parks. So and again, they're open, Orlando-based Market Traders Institute, we have traders that are all over the world, but we have workers that are in Orlando. So some of the people that I work with have season passes. They've been going to Disney, kind of experimenting to see, like, is it safe? Do I feel safe? Would I do this and get a season pass and stay with it? It's as safe as it can be. Right, capacity is way down. Everybody that's going to the theme parks have masks on. All the employees have masks on. I think food and bev is like completely like isolated, or they just want to make sure you're maintaining social distancing. And what has Disney done from a stock point? Well, they dropped a ton. They've been fighting their way back. So I think it's an important real stock to watch to see, where does coronavirus take the market. If the coronavirus is going to put a stranglehold on the market for good, or for better, for worse, Disney's a stock that I think we could watch. I would love to buy Disney below $100, but to do that, we're going to have to see another drop. Okay. Darden Restaurants is similar. Darden Restaurants has the, your kind of portfolio of, I'd say economical restaurants. You've got Olive Garden, I don't even know, what is it? Some Seasons 52 and Bahama Breeze or something. There's like 4 or 5 restaurants. I remember it. I just was in a webinar yesterday talking about this. I remember getting gift cards like through college from Darden Restaurants, and you could go to like Red Lobster, Olive Garden, all these. Cool. But watching that, where are we at with coronavirus and restaurants? Same thing. Restaurants are open, limited service. Maybe they're not in-person dining, but again, I would say if you are eating out, please support local restaurants. Please support the workers. If I still eat out once or twice a week. Tip them well. Go and just pick up the food. I don't want to sit in a restaurant right now, but I would gladly go pick up the food and just take care of the workers that are doing that. I'm just happy they're open. Obviously that was a big deal when everything shut down back in March and April, but that's another good stock to watch. How are the restaurants doing? It's got to be tough out there. And here we are with markets at all-time highs and like everything. It's like everything is not fine, but this is why there's a disconnect between what the markets are showing us and what reality is. So I'm watching those real stocks like Disney and Darden Restaurants. Aussie Yen, a really nice currency pair that correlates with the stock market. If you want to watch the Aussie Yen and watch the S&P 500, you'll see a lot of similarities. So this year, the yen structure was really similar to the S&P 500. We had our big sell-off in March, our crazy bottom and recovery back in April and May and June and July. And the Aussie's been this amazing recovery. We had a 2-year downtrend in the Aussie. It got pummeled for the last 2 years. Couldn't win, right? You couldn't buy the Aussie. And all of a sudden we have now it's the strongest currency pair out there. So an amazing turn of events on the Aussie. Same thing in the stock market. So there is a correlation. There is a similarity. Again, when we want to see what's happening through the next couple of months into the election, into the end of the year, if you're looking for a simple way, like if you don't want to short the SPY, if you don't want to play the options game and buy puts, if you don't want to have a bearish outlook on the stock market, you can still be a Forex trader and trade the Aussie Yen. You can trade the yen. That's a sentiment-based pair that has a lot to do with how the stock market overall is doing. So it's an easy way to equally buy and sell. It's just a spread and margin on a trade like Forex account. Bitcoin, pretty interesting story on Bitcoin. All cryptocurrencies, as the dollar's been weaker, we've seen a pretty nice rally in cryptocurrencies. Bitcoin's hanging around that 11,500 mark, 12,000. It looks to me like the posture is pretty promising to go higher. I'm in cryptocurrencies for the long haul. My base around Bitcoin is $4,000. I'm sitting at $11,500 or $12,000 right now. I hope it goes up to $1 million, right? That will be my millennial lottery, and I'll just be happy that I put in several $1,000s. This is my finite amount. Let's turn it into 1,000+% gains. Why not? So watching, but all the majors, Bitcoin, Ethereum, Litecoin, Ripple, against the dollar. So I'm not trading the crypto versus a crypto. I'm not into altcoins. I don't follow them that closely. I want kind of the legitimate liquid cryptocurrencies. So long story short, you can see that I'm watching a lot of things. I'm trading a lot of things. So how does this translate back into the markets? So let's talk about. I'll get to this slide in a second. I'm just going to go to the charts here. So let's talk about this dollar index. Okay. So this workspace that you're seeing is actually pulled directly from my trading room. We just finished a session this morning from 8 to 10. I run my live sessions every Tuesday, Wednesday, Thursday for a couple of hours. I do a weekly outlook on Mondays. So again, if everybody joins me or signs up for it, my weekly outlook is free on my YouTube channel. And then Tuesday, Wednesday, Thursday, we're in a trading room together. So dollar index in the near term, I am looking for strength. You can see me drawing on the charts here. So I'm looking for some more evidence on the right side of this trend line. I want to see if the dollar is going to do a better job of carving out some lows in the near term. Now, look, I don't think that the posture is necessarily changing on the dollar. I think what is likely going to happen is we've had a, too far, too fast type move, shallow pullback. I think we had a too far, too fast move on the dollar. I could see this structure right in here forming a reversal pattern coming back up. Past support becomes resistance. So could the dollar get stronger in the near term? Of course it can. But if you're going to play this out for the next 6 to 12 months, I would suspect that the dollar, if we find resistance here or we find resistance in here, I would suspect that dollar is going to go down and fulfill these larger levels. So we're seeing a lot of things right now that feel like path of least resistance. The market isn't forming a lot of tops and bottoms. This is a bottom. Like I'm looking for the bottom to form, but I'm not guaranteeing that it's going to form because we might just as easily continue to push this down, lower highs and lower lows. It might just drift. It might get choppy, but then we have a bottom in this yellow box area. This is just a nice little inefficiency that I found from 2018. If we hit that, I'm looking for that to be a nice little catapult to push price back up. So within the structure, I'm looking for right now dollar strength, currency pairs that I'm really interested in trading. I am currently in my live accounts. I'm short Aussie dollar, I'm short euro dollar, I'm short pound dollar, and I am long dollar Swiss. I'm looking to get long dollar CAD. I am staying out of dollar yen for right now. So most of my dollar crosses, I am favoring dollar strength. Technically speaking, they all individually have great setups. Dollar index has a great setup. I like to look at higher time frames with disagreement between price and momentum and overbought, oversold conditions. Really simple way to start planning trades, and then wait for price action and confirmation between my systems and strategies and indicators to find the trade. So I like those near-term strength moves on the dollar. I think that's a good one to keep an eye on. I said the Aussie yen, we can kind of tie this into the stock market, okay? So if the Aussie yen is up here towards these highs, we had, and this was pretty wild and crazy because we had our, February highs in the stock market. We had December 2019 highs. We had a lower high here in January, a lower high here in February. So even though the stock market made higher highs, the Aussie yen did not. It's almost as if the Aussie yen was actually telling us that something was coming, right? So sometimes we have currency pairs that lead the way versus the stock market. Other times as the stock market leads the way. So this is an important one to see how this all correlates. I have some really good patterns going on right now, okay? And if I miss any questions here, by the way, I'm seeing some right now. If I miss any questions, I will try to get to them towards the end. Yep. So yeah, like I see, euro dollar and dollar index, stuff like that. So I'll get to those in the end. I'll try to just, do a little power review of those questions. But Aussie yen, right now, look, we're at some really great resistance levels. Again, my job here is not to call the top. My job here is not to predict. My job here is to make sure we have confirmation. So if we're going to stay bullish, then we have this high. That is resistance. And if the market just wants to keep drifting, well, this Aussie yen is going to keep drifting. If we're going to have a turn for the worse, then we're going to have this come back down, challenge this low, and possibly give us a topping pattern and come back into these June sell-off levels. So, I mean, I'm pretty much 50-50 on Aussie yen. I could see just by the nature of the stock market path of least resistance, this drifts higher. We might not think it can go any higher, but if the market does it, the market does it. I'd rather be in and long and profitable than sitting here guessing like when the top's going to form. So I have a couple robots trading right now that are going both directions. If it goes long, I'll be profitable. If it U-turns and confirms, I'll be taking trades to sell it. So I expect volatility and some decent maneuvering on the Aussie yen to pay me. Okay, so that's a good one to watch. Structure-wise, I do think this is setting up for a pretty promising pattern. I guess the question is this pattern setting up something like this? Is it going to be like a larger rising wedge where we've had this slow move to the upside? Is it going to sell back down for one quick sell-off? We had lows there. We had lows there. So this structure that I've watched for 2020, here's my question. Is this trying to give us a massive reversal pattern? Or is this actually setting up new structure highs and lows? Perhaps this is all resistance that's been newly created. And then because we had our flash crash and flash crash lows, this could be new support. So we could be setting up nothing more than massive resistance right here, and we could sell all the way back down to support. Now, the stock market would have to cooperate with that. We'd have to see a lot of bearishness in the stock market, high volatility. We'd have to see the VIX going higher, fear out there, uncertainty out there. Maybe it happens. Maybe it doesn't, right? It's weird to think that we're going to have so much, chaos in the stock market with such an accommodative central bank at this time. But I'm not saying what the central bank is doing is a right thing or it's sustainable, but here we are watching trillions of dollars go back into the markets and suppressing volatility. So I like this setup. I think there's a strong correlation, but if you're looking to trade the stock market, okay, well, here's a good way to do it. The currency pair of the Aussie yen follows it pretty closely. So if it drifts higher, expect this to keep going. If it breaks this structure, I'm looking for this to come back down and give us a bit more of a reality, kind of a reality check in the stock market. And October is notoriously a very volatile time for the stock market, so that's an important thing to watch here the next couple of weeks. All right, let's see here. The VIX, let's go to the VIXy. So I talked about the volatility instrument. So the VIX you can follow. I do trade a lot of options on the VIX, VIXy, VXX. This is the higher low that I'm talking about. Ideally, I was looking for entries down here. We had this gap on the VIXy. I was trying to get filled right there as price was coming back down. So I was looking at $15 and $10. I think I put 15 and 11 on my this is for my trading room. So I'm looking at limit buys around 15 and 11.50 to buy the instrument. I'm still going to leave those. I'm still going to leave those orders in. If I see, a very strong weekly candle closing, then I might take a kind of what I call a tester trade. I might take a participation trade and see, okay, look, if I buy it right here and it's a small position and I get filled at any of these positions here for like kind of a second trade, I think that we're going to still be higher as far as volatility goes. Give it the next 3 months through the election, through the end of the year, going into 2021, I think volatility will be higher. Okay, if it's not, and let's say I start a position here and I get filled at this level, I get filled at this level, I'm still looking at buying this thing near those all-time lows, which I'm okay with. I don't need this to go back to these March and April highs. I don't need to go back to those 2008 highs. I just need this to respond off these lows to get paid. And for me, I think we could probably turn 100 to 200% profit on these VIXI instruments or the VIXI or these volatility instruments. So if you're wanting a little watch list here, this is what I do watch. I watch the VIXI, I watch the VXX, I watch the UVXY, and I did trade the TVIX back in March. All of these, by the way, probably provided, I mean, on each position, it was like the TVIX was like a 600% gain. The UVXY was like 400%. The VXX was 300 or 400%. All of them paid like a ton. It was ridiculous and awesome. But the TVIX had a 10-to-1 split during all of this pandemic stuff. So a 10-to-1 split while I'm holding, I didn't really love. They were kind of manipulating the price a little bit. It was repriced when the split happened. So I'm going to go ahead and cross that one off the list. So I don't want to trade the TVIX going into this next round. UVXY, I believe, is a double leveraged VIX instrument. So I'm going to cross that one off as well. I just want a simple liquid volatility trade. I'll take VIXI, I'll take VXX. Okay. So if we come down here, I'll probably look at some options. I might just buy some calls and keep it really directionally simple. I'll try to get the expiration out enough where I'm not getting ripped off on paying for that time, or I can just buy the ETF and trade it like a stock. Okay, so those are some really good trades that I like. Rick's asking about the Aussie Yen, S&P 500. If you look at the S&P 500 to the Aussie Yen, you'll see some correlation there. Yep, good question. Okay, so levels that I'm looking at on these instruments are right there. Again, this is all part of that watch list, right? So the VIX, the SPY, the stock markets, the Dow Jones, I'm really interested in looking to see, will the Dow Jones recapture those highs? And if it does, one thing, this is just food for thought, something to munch on. If the Dow Jones finds a way to hit, after this March sell-off and the Dow Jones finds a way to hit the February highs, is that the trigger for everything to start selling? Or is that where the market's gonna be like, you know what, here we are, we did this amazing recovery, off we go. So I'm again, it's like the SPY is still climbing, the NASDAQ's still climbing with that kind of unrealistic concentration. But if the Dow gets up to new highs, is it going to be all this work for nothing, all this work for a failure at the high? Again, if this drops, you're going to see volatility increase. You're going to see currency pairs, increase day to day. That's all good, right? All I want to make sure that I'm doing, and I'm helping traders do, is be prepared. We should not be ill prepared for a stock market to sell off at historical highs. We should not be ill prepared for the stock market to keep going, because we've seen it for the last decade. The markets have fought off and ignored a lot of things geopolitically, to the point where now everyone's like, it's not even real. It's so disconnected. It's not. I get it. I believe it, but I'm not going to fight it. Okay. All right. So let's look at some of these stocks. Let's look at Disney and Darden Restaurants. Take a look at those. So this is Disney and Darden Restaurants. Disney has made a pretty good recovery back to, the breakout points. So let me go into a daily chart here. So we're at 133 and change on Disney. Here was our gap and our breakout right around that February drop when things got really ugly and volatility started to go nuts going into March. We're very close to filling that gap. So I'm just going to draw a box on that gap. And, can Disney make a full recovery? It looks like it's trying. It's making a heck of an effort to do it. So this island gap is filled, not closed, but it's filled. Price is coming to that gap. So now the question is, are we going to sustain that recovery? Okay. So what do you think could derail Disney? Right now they're operating at, a fraction of capacity. They're shutting down most of the rides, some of the rides. So, it's just like they're at kind of a shadow of what they used to be, as far as like full operation. But they still have Marvel. They still have, movies coming out. It's a huge parent company. ESPN sports are still coming back in a little bit of time. We'll see what NFL does, but professional sports are at least doing okay. So can we make a full recovery? And is it justified to see Disney at all-time highs? I don't know. I'll say this. I want to buy Disney on a dip, right? And again, I'm not asking Disney to come back to $90. I don't know. I don't want that to happen. But what I want to see is, look, give me something here, right? Give me this. Give me that pullback. Give me this pullback. Give me something to buy a dip. And I will take a position here. I'll take a position here, and I'll load in. I like Disney. They pay dividends. They're a strong company. They're a huge company. Okay. But I can't justify buying here. So did I buy here? Yep. And I've already taken profit. I've taken a lot of short-term profits this year, probably more than I've ever done in my stock portfolio. But it was such a good opportunity to see just chaos, falling knife, jump in, double bottoms, good price action, buy the dips. I mean, it's like I've been waiting for dips for 5 or 6 years. I'm sure a lot of other traders have as well. There were literally trillions of dollars on the sideline waiting to get back in the markets. And now we have, no interest rates whatsoever, right? We have 0% or very, very fractional interest rates, and the market's looking for yield. So equities is the spot you're looking for yield, but you're also hedging with gold. You're also, playing it safe with bonds. You have 10-year and 20-year notes at complete opposite ends of the spectrum. So there's just a lot of weird stuff going on. But Disney, I think it's a real stock to watch, because if there's an opportunity to buy it, I'll still buy it at $100. I'll still buy it here at the lows at $80. But if we recapture those highs, I can't buy it. I can't buy it at these highs. So it recaptures the highs. Great. Let's see a dip. Let's buy a pullback, something. Okay. So that's what I'm watching. But I think coronavirus could derail this. Yeah. A lot, actually. Just if we had any threats of shutdowns, I think we could derail this quite a bit with the entire stock market. But again, I think the market's trying to do its best to shrug off everything. Like, oh, coronavirus, that was back in March. We're not going to deal with that now. Now it's all about the election. Okay. And then Darden Restaurants, DRI. I'll just go Darden here. Okay. DRI is another one that I'm watching. And I know I have to start wrapping up here in a few minutes. I'll also take a couple minutes and yep, that's a good point. Yeah, Taylor, good point. Taylor says TVIX has gone away. And UVXY is a 1.5 times leverage. Yeah, so TVIX, and again, I was really lucky on that because I had a similar story to TVIX. Like when that thing did the 10-to-1 split and now the instrument's gone or went to like some third party, like Credit Suisse third party shadow market, I was still able to take profit on it. There's enough liquidity for me to bail out of my positions and be paid on it. But I had the same thing happen with oil, right? Everyone is all excited when futures priced oil at negative 30 cents on the Bloomberg terminal, and I was buying UCO and USO. That was a really dumb decision. I'm still upside down in those ETFs. Even though oil has made this great recovery from essentially $0 to $43, and now we have like the most boring charts ever on oil, those ETFs are still negative. So you have to be careful on that decay. You have to be careful on how those things get repriced. So again, do your research and your due diligence on those ETFs. And again, TVIX, yeah, that's why I'm not in that one for this next go. This is Darden Restaurants. You can see again, just straight down when restaurants are closing. I mean, we went, look at this, $120 to $30. I mean, we're down to $27 here. Now, yes, we made a great recovery. This almost is a 400% gain off the lows, right? But it didn't. And again, what was the structure I was looking for? This was one of the company I was looking to trade. We had this bottom. I wanted to see if we come back and retest the lows. I love it when we have lows and double bottoms. I love buying that double bottom. This ended up being a cup and handle. You can see it right here. So we had no structure on the sell-off, goes up, pulls back. That's the breakout. So we could still fulfill that cup and handle a little bit higher, but I think we're getting there. And this could also be setting up for another, just like with Disney, if we break that structure, we could sell off. Okay. So I'll keep an eye on this one right here, just kind of watching this trend line to see, how are restaurants doing? Are they still okay? Capacity wise, it's probably not the same. But like I said, if you are, patronizing any restaurant, take care of the staff. Don't complain about the food. Just be happy you can go out to eat, right? It could be worse. So this is one that I'm watching for that. Is there room to recover? Yes. Could we range a little bit more? Sure. Could we have a dip on this with any shutdowns? Of course. So, I mean, if I was able to buy this again at these lows, fantastic. Whether I get it or not, I'm not sure. But this is one I'm going to watch and see what the kind of sentiment is for this stock and see how it translates into other, certainly other sectors, but also just overall stock market direction. Okay. And that's, I guess for the time wise, I might have a couple more minutes. And let me go ahead and review some of these questions. So I traded Forex for years, but why do stock traders and everyone else look down? That's a funny part. Yeah. So Bundy's asking this question. It's funny. Like, look, I'll say this. I am super happy that I learned how to trade Forex. You know why? Because I've taken the skills and the price action tools that stocks would have never taught me. And I am a better trader because of Forex. Forex is a trader's market. Forex is an efficient market. It's the most liquid market. Yes, there's a lot of manipulation. Yes, there's a lot of, collusion out there. There's LIBOR scandals. Look, you don't think the stock market's fixed right now? I mean, you have central banks, global central banks that are buying US equities. That's not fixed. I mean, you just have so much money on the sidelines that you and I could never touch, and it's just getting pumped in. I mean, there's manipulation all over the place. But look, I will say the skills that you can learn, the tools you can have, the simplicity of trading Forex, you have 28 crosses, right? 28 majors and crosses. I'm not talking exotic pairs. I'm talking everything from Aussie, CAD, Swiss, Euro, Pound, Yen, New Zealand dollar. Those are all, any combination with those currency pairs. Those are all majors and crosses. 28 you have to watch. That's a lot different than 1,000 stocks. That's a lot different than navigating all these different sectors. What's hot, what's not, what's moving, what's not. I mean, Forex is pretty straightforward, and the skills to take price action and patterns and see the repetitive nature of it, to see that there's no crazy gaps. You trade it for 5.5 days. It's a 24-hour market. I don't know why, FX markets get a hard time. I think part of it's because, I don't know. I mean, probably people have dabbled and they did the wrong thing. They over leveraged. They made stupid mistakes that are avoidable. They lost money in Forex. They're like, it's rigged. It's easy to make the excuse, but Forex is a great market. It's my favorite market. I mean, I trade a lot of money in Forex. So if it wasn't for Forex, I would not be the trader that I am. So that's a great question. And I will defend that all the time. Do I analyze euro dollar? Of course. I analyze everything every day in my trading room. Let's see here. So if dollar index is a downward trend, the trades you're in are correct. I'm looking at, some near-term tops and bottoms to form. Yep. Near-term tops and bottoms to form. So yeah. And like I said, I mean, it might be path of least resistance on the dollar. We might see that high and low form. One thing I still love about the Forex market is when it goes too far too fast, the Forex market has a pretty amazing way of balancing. You don't believe me? Look back into 2012, 2014, 2016, 2017, 2018. All these really look no further than last year. The pound pairs last year could not catch a break. April and May and June and July and August, the pounds were absolutely crushed. And then the hint of a UK election, a hint of these snap elections and Brexit resolution, we had this crashed pound come back in full swing and literally fill every single pivot, every single gap, every single inefficiency before the election in December. So, when you look at a currency pair that's gone too far too fast, there's a pretty amazing way that Forex finds a way to find fair market, to find equilibrium. And, again, I pick and choose my battles. Okay. So I'll leave this. I got a couple more minutes before I hand it over. One thing for me, if anything I said resonated today, and if you want to join me in my trading room, we've had a pretty amazing track record. My job is to be consistently profitable. My job is to talk about every single trade that I take. I'm just like you. I am taking trades. I'm a retail trader just like everybody else. I've just been doing it for a long time. So I have an audience. We have a lot of fun doing it. It's like trading with a community. You're not alone. And we're, collectively, we are competitive. We are persistent, and we will be profitable. That's our plan. So for the last, 4 years, I've run a trading room here, 2017 through present. I mean, we're killing it. We're making, 25, 30,000 pips a year, just in Forex. We talk about stocks. We sprinkle them in. We've got some Bitcoin stuff. We got some cryptocurrency stuff, but it's heavy in Forex for this trading room, for the Flex trading room. Market Traders is primarily, and has been for a very long time, a top tier Forex educator. So that's what we focus on. But I am doing a lot of stuff with stocks. I've been trading stocks for longer than Forex, but I'm a much more active Forex trader. Stocks, I want to be an investor. I've taken a lot of short-term gains this year, but I want to be an investor. I want good levels. I want, big returns, but most importantly, you always have to manage that risk. Okay. So things you can get. So here's an offer. I think we're going to type it in. There might be a direct link that comes out here. So here's what the offer is for me. Look, I'm posting on my YouTube channel. You can search my name, Chris Pulver, on YouTube. I have a channel that every Monday I post a weekly outlook. I also have a video series called Keep It Seriously Simple, free education on support, trend lines, or support resistance, trend lines, equity management, growing your account, adding to winning trades, finding a broker, you name it, just like good, solid, timeless education. It's out there. It's free. You can check it out. My weekly outlook I post on Mondays. That's what I plan to trade for the entire week. That's what I get into my trading room with. So we're live Tuesday, Wednesday, Thursday. We're going to be live this week. One thing I can sprinkle in, let me see if I can chat this. All of you that are in this session today, I will give you a chance to join me on Friday for a little bonus session. I'm going to host a live session in non-farm payroll. We have CAD news on Friday, and we have non-farm payroll news for the U.S. on Friday. I will post a link for that. If I can chat in here, if I can chat, I will do that. So I'm going to post a link, and let me see. It's right here. So this is, for me, it's a session on Friday morning at 8 a.m. Eastern time. So let me see if I can, where can I type this at? So Q&A, can I answer this? No? Let me see here.
Hey, Chris, there should be a chat box if you mouse toward the bottom
There
of
it
your
is, there it is.
screen.
Okay, cool. Yep. So
You see it?
non-farm Friday. This is Friday, September 4th. Thank you, Jeanette. Friday, September 4th at 8 a.m. Eastern time. And we'll be live. You can register for that event. All of you are welcome to join. You don't have to be with Market Traders Institute. I just want more the merrier. Let's talk about it. Let's have some fun. If you'd like to join me in my trading room, you're more than welcome to. 30-day access. You get my trading room Tuesday, Wednesday, Thursday. You'll be signed up for my signal service for the next 30 days. Like I said, track record-wise, we've done pretty well. The difference between my trading room and my signal service is that my trading room, we get to talk about everything. You know, I get to talk about, you know, me sitting in a trade that's counter trend and not quite having confirmation. I get to, you know, draw on my charts and say, this is exactly what I'm doing with my trades. The signal services, I treat it this way. If you're trading alongside me, it's easy to follow. If you're not ever joining a live session, but you want to follow some signals and make some profits, it's an entry, it's a stop, it's a limit. Every trade that I take for the signal service will have an entry, will have a stop, and the reward is always bigger. I'm always going to go after a surplus. That's the easiest way for this signal service and me and anyone following to be profitable. Okay, win percent, I'm not going to take a trade I don't think I can win. Right? Are we going to take losses? Sure. We've had, I think, 10 trades so far in the last 2 weeks. I've had 2 losers. I've got 6 that are 1 in profit right now and a couple that are pending. So we're going to take a lot of trades, but it's clean on the signal service. It's easy to follow. They go right to your phone. You have a Telegram channel. You can follow me for my trading room. Like I said, we'll talk Forex heavy. We'll talk stocks. We'll talk cryptos. Anything and everything to be profitable. We're traders. Okay. So if you have any questions, let me know. If you want to, I mean, again, I'd love to see everybody join me on Friday. Come in for fun. Non-farm payroll and CAD news. We'll make a few trades if it's worth it. Otherwise, we'll just talk for an hour and have some fun. And you know, see you next week in the trading room. So that's it for me. Jeanette, Raleigh, you have any questions for me?
Yeah, I tell you what. Once again, Chris, thank you for a fantastic presentation. I mean, that was a fast hour. You covered an awful lot of ground.
Yep.
And it was great to get to meet you and to know you and to understand a little bit about your background. Just made it all that much more fascinating. So great presentation. I think you picked off most of the questions, but there was one that came from several folks, and it might be those that are not familiar with trading Forex. But from your perspective, trading Forex, do you have a thought as to trading through a broker or through an exchange? Is there a difference between the two of those, Chris?
Well, you know, so I work pretty closely with this firm in Florida called Forest Park FX, and anybody that's asking me about broker related trading, I just send it to them. I work with like 5 different brokers right now. And I've been a direct broker trader for forever.
Okay.
So you're saying exchange like an ECN, like a different feed?
No, not like the Chicago Mercantile Exchange. So trading, you know, pairs through that versus through a broker. Is there a difference?
Honestly, I mean, if I had any experience in that, I would say okay. I'd have more of an opinion, but I've just been straight through the broker. And the reason why is, you know, actually the guy that first introduced me to trading, I didn't know this. This was a little sneaky trick that he did on me. Okay. He was an introducing broker at the time. And I opened an account with Global Forex Trading, GFT, and he was encouraging me and I didn't know it, of course. I had a $2,500 account. He's like, Pulver, hey man, you should be trading $5 lots. You should be trading standard lots, man. You can do it, because it was 100 to 1 at the time. I was trading standard lots in a $2,500 account, which now would not even be allowed. Like, my leverage is not enough for 50 to 1. I can't do that. But okay. He was getting paid every month. Everything I was trading, he was getting paid as an introducing broker. So anyway, I mean, I separated ties from there, but I've been between Global Forex Trading, Alpari, FXCM, Forex.com, Oanda, Pepperstone, Devisa, Global Prime. I mean, I work with all these different brokers. Look, make sure you have a broker that's well regulated. The spreads can be, I mean, for the most part, they're all competitive now. After 2015, the Swiss National Bank, after that flash crash move, the broker industry was completely disrupted. So it was kind of those that can survive create, a little bit more of a stiffer competition against each other. But trade with a regulated broker, I mean, I have 7 figures in Forex, and I'm not concerned about it. It's spread out through several brokers, but my money's out there, and it's with brokers. But they're regulated brokers. They're large brokers that have been in the business for a long time. I just trade. I'm a low volume trader. I know the brokers probably hate me because I sit on positions and I take profit, and they just pay me. But hey, as long as this is my thing with a broker. If they don't mess up your trading, like I will leave a broker if they will make it harder for me to be profitable. And this has been happening. Just a short note, like if anyone's experienced a broker that is, all of a sudden randomly like switched off a VPS service, or they've switched servers on you, or they've zeroed out, or they've threatened to like liquidate your positions because something weird's going on with FIFO violations. It's like, if it makes it harder to trade with that particular broker, go find another broker.
Exactly.
So they play some games. Believe me, they play some games. But look, it's just like anything else. It's all risk capital. Take care of it. But I mean, I've been trading for a long time, and I don't plan on stopping. So
Right.
I'm still going to stick with the broker game and just try to beat them at their own game.
That's great, Chris. And I really do appreciate, the clarity of the answer that you made to that question, because I think that's one of the things on people's minds. So thank you so much once again for coming today, for preparing this presentation, for delivering this presentation. You did a great job. I'm going to grab the screen back here for a second. And once again, thank you so much for coming. Folks, you can see Chris's special offer here, the Flex Trading Room in Elite Trading. Get his trade signals via text and Telegram. Trade live with Chris in the Flex Trading Room, and get to network with other traders who are sharing similar techniques. So markettraders.com/TTM. And just a little note that I made to myself, because I pay attention to what all the speakers are saying, like what Chris said: patience plus preparedness equals profits. Remove emotions, follow the rules, and that's the kind of consistency you want. And I think you're going to hear that from most everybody that's going to present to you, but I really like the fact that he emphasized that. And so here we are.